Good afternoon. This is Keith Brown with some commodity consulting commentary for Thursday. It's about 3:30 Eastern Time. Markets were somewhat mixed today. Cotton was higher, but are we surprised? Because cotton was lower yesterday. And that market continues just to stay within the confines of this very tight range since June, about 6 cents. Waiting on something. We don't know what that something is, but now I'm sure we're going to wait on that supply-demand number out tomorrow week. And of course, also come tomorrow is the very important jobs data, so that will have certainly a peripheral effect on cotton prices. Over in the grains, they continue to really be nervous. We broke corn and beans pretty hard yesterday. They came back. We got above $8 in December corn, broke again, and then they came back and settled slightly lower. Corn down 4 cents, wheat down 14, as the Russians have come out and said they probably will have more exportable wheat than they realized, although I don't know we will go with that number. And then the beans were off some today. A little bit of fear about light rain. With the weekend coming up, I think we could see some more choppiness, more two-sidedness in these grain markets in particular. And other market movers today, the European Central Bank, which really stepped up to the plate last week or last couple of weeks, said they're going to do all they can to maintain the euro currency, had their big meeting today and their big announcement, and it was nothing. As a matter of fact, the Dow Jones sold off about almost 200 points. Right now at 3:30, it's running about 127 lower. So that sort of weighed on crude oil and gold and other markets, and may have a little hand in the grain markets selling off just a little bit as well. Certainly with the dollar up because of a weak euro, the fuels were all lower today, and of course I guess that's a good thing because we keep thinking that we're going to have one more push down these energies, and we probably are looking towards cash forwarding some fuel needs as we prepare for the fall harvest. Of course, we got to get to that harvest, and we got to get through this supply-demand report and look what these numbers are. Up until now, you can say that the grain markets have been rallying on conjecture. That is to say, we know the corn crop is hurt, but just how hurt is it? Next week, of course, we're going to get the hard numbers, or where USDA has gone out and at least taken some field samples. And then, for better or for worse, the market will take those numbers, and either we will go up or go down. It seems to me if we come out with this below 130 bushels per acre on corn, and we keep demand components virtually the same, we could see a negative carry out for corns as high as, or rather as low as 900 million bushels. And certainly if that is the case, then corn right here is just too cheap. Basis has been firming on the front end, it's been weakening on the back end because a lot of these elevators and these elevators and grain merchants don't want to put up the money to book corn for next year, so letting the farmer carry that. So that's something we got to think about as well. At any rate, tomorrow's Friday. We'll see what it brings. We'll see what that jobs data number is, and then we'll start thinking about the weather and then in the next week's supply-demand number. Have any questions or comments, give us a call. 1-800-910-1910. Have a good evening.